What's going on, everyone? This is Stephen Place with Precision Volume Alerts, and welcome to Watchlist Wednesday for Thursday, December 16th, 2021. If you're wondering why I'm doing Watchlist Wednesday on a Thursday, it's because it's December 16th, all right? We're about 10 days away from Christmas. I've got a birthday at the end of the month. My daughter's got a birthday coming up soon, so, I'm doing all sorts of stuff left and right and just trying to hang on with the overall market. To be honest, we haven't missed much with the market, right? We've had some central bank shenanigans. The Federal Reserve is saying, hey, inflation's a thing. We probably need to taper. And, it's been a chop fest and volatility's picked up. And, if you're passively indexed with the S&P 500 or the NASDAQ 100, you've probably done okay. That's because large cap stocks have been holding this market up. While everything else is getting crushed, right? Growth tech, biotech, banks are doing okay, but a lot of these momentum stocks that over the past 18 months pulled forward a lot of earnings are getting absolutely crushed. So as an example, I ran a study where basically we were looking at the mega cap stocks. So things like Apple, Facebook, Home Depot's in there, very, very, very large companies. And then I said, okay, which one of these stocks are up on the quarter? So basically the past 3 months, are they even up? All right. So we don't care whether it's up 10%, just green. So those stocks, 35 out of 50 are up. So that's about 70%, right? That's pretty good. If you take a look at stocks that are mid cap or lower, only 35% of them are up over this quarter. It's ugly, and a lot of names getting absolutely crushed. I keep going back to the DocuSign earnings and the Asana earnings from, I think it's 2 weeks ago now, where they just got obliterated. Peloton, went from $140 to about $35. All of those names are getting absolutely hammered. So what do we do when we have strong corrective moves like this? One thing you can consider is to start looking at relative strength stocks. Basically saying, what's left over, right? If everything's getting crushed, what can we look at? So what we're going to do is step through building a technology relative strength watch list for idea generation. Okay, and that doesn't necessarily make it a trade. What we want to do then is take those ideas and then put them onto our roadmap to say, are there actionable and identifiable levels and trades to take within that? So I've already done the watch list development just in case I couldn't do this easily live, but I think we can knock this out. So what I like to do, I like to go to FinViz, and FinViz has a screener. And what we're going to do here is we're going to click on all. And what we're going to look at are tech stocks. So we're going to go to the technology sector. Okay. Now, this should just show you how bad it's been. All right. So we've got 762 publicly traded tech stocks. And then from there, we're just going to go with market cap. So we're going to avoid micro cap stuff. And we're just going to say anything with a valuation over $2 billion. So market cap is plus mid, which means over $2 billion. So that gets our list to 377 largish companies. And then from there, what we want to do is we want to say, are they within 5% of their 52-week highs? All right, so it allows for a 5% correction on these stocks from 52-week highs, but anything more than that, it discards. All right, so just keep that number in mind, 377 largish technology stocks, and we're going to go 0 to 5% below high. And so we go, what was the number I just said? 370 something? We're down to 31. So you've got 31 stocks in the technology sector that are pretty big and that are within 5% of all-time highs. Now, I know in this list, we've got NUAN, Nuance, which is a buyout. And so you discard that one completely. And there's a handful, I think 3 or 4 other buyouts that basically they're trading, but they're not really trading. They gapped up on the buyout news and then they didn't go. So I can just show you really quick. We'll click charts. And then we can look at something like, where's Nuance? We'll go down there. Like Nuance, it got bought by Microsoft back in April of this year. Then you've got Rogers, which got bought out. So those two aren't tradable candidates unless you're doing merger arb, but that's kind of outside the scope of what we're talking about. So excluding those two, and I think there's 3 more, you're looking at only 20 tech companies that are within 52-week highs. Okay. Now from there, you can develop a pretty good watch list and say, okay, if this market, if this market falls apart, you've got very clear levels at which you can stop out. These stocks are still in uptrends, so they're a little bit easier to trade, and you don't have to worry about some serious downside momentum. And given the kind of market we've seen over the past, I guess, month and a half, with everything else getting taken to the woodshed, this is a pretty good list to work from. Okay. So you can do that. You can go through FinViz and you can set this up. It's a very simple screener. It's technology sector, market cap plus mid, and then within 5% of the 52-week highs. And that gives you a pretty tight list to work from. Now from here, there are some folks out there, I got a couple trader buddies who are momentum growth, William O'Neill kinds of folks, and they'll go look at the sales growth and other things like that. For me personally, I'm looking at my roadmap and saying, okay, are we seeing continued responsive buyers into key levels? Okay, so it's not just are we finding support, it's what's the nature of price action into that support. So what we can do now is hop over to our TradingView app, and you can use whichever one has the ability to give you volume by price instead of volume by time, and you can get some actionable ideas. So let's just run through a couple. First up is ANSS, and this is ANSS Incorporated, $400 stock. And you can tell right here, I'm going to try and point this out the best that I can. There's this volume shelf, and then you had a low volume node, which also coincided with prior resistance, which did in fact act as support right here. That's a bullish sign that says, okay, this is holding up very well, especially relative to how a lot of the other tech sector is going. Okay, had some very nice momentum, a push to about $410 a share, and it's holding up. It's not completely falling apart. We found buyers exactly where we were supposed to. That's a good sign. Okay, and this looks as though it is, kind of a consolidation pattern, a 3-week high and tight, depending on how you want to view it. But the main thing here is that it held its volume shelf, and it's continuing to make higher lows while the rest of the market looks like hot garbage. It's pretty good, right? How about another one? CIEN. CIEN. This is Sienna Corporation. This had a really nice earnings event, and it saw continued upside momentum. Now, is it a good actionable place right here? No, that's not the kind of trade I like to take. What I would like to see is some kind of a basing pattern, and we call these flags or pennants or high and tights. Basically what we're looking for is price being accepted and more volume building out, and that will be shown on our roadmap as well. As more volume builds out, and if we see any kinds of dips below obvious levels where we see a stop run and then a push higher, that shows that they're just trying to clear out the leverage out of the system, and longer term buyers are willing to step up. As long as those buyers are willing to step up, odds are this sucker is going to continue to trend. Another one, EXLS. This one is a great move from the March lows at $40. It's currently trading at $136. It could be topping out right here. It's not. I'm just looking at the volume right here, and it doesn't appear to be very heavily traded, so that's a little bit more of a risk. You could make the case for a little bit of a double top, but we can see the sellers have continued to come in 137 2/3, maybe a little bit higher, maybe at 138. You get a clearance above that, and that's some pretty clean momentum to work with. I'm also looking at this, I don't have it pulled up, but I'm assuming that this push right here was based off of earnings. So when you have good reactions to the upside on earnings, followed by sideways action, maybe a couple rug pulls or two, that sets the stage for a continuation play back to the upside. Next up is F5. This is one of my favorite traders in the tech space. This one, if the market really pulls back, this has a very clean level to work with. Very similar to what we saw on ANSS, where you have a volume shelf as well as prior resistance. If we did pull into that, about $214 a share, that would be a great place to buy the dip. But as it stands right now, this is holding up. It's coming back to new highs. It did find some rejection today while the rest of the tech sector got hit. but this is a very clean looking chart, and this does have the potential for continuation. One thing I would also like to throw on there are some anchored VWAPs from that pivot low and then this pivot low as well, just to give a reference on kind of an over under. That second AVWAP is a little bit, you know, it's okay. We're not seeing price responses from it, but I would treat it like an over under and say, okay, as long as we're above that level, you know, you can manage your risk against that as well. Next up is, that's not the right one. That is going to be Genpact. There we go. Okay. It has the look of another continuation play, another base on base play. You could make the case for some kind of a consolidative pattern, this triangle pattern right here. But what I do want to point out is this high volume node right here. Okay, that HVN, those HVNs sometimes act as magnets. And if we see responses off of that, sometimes it tells us that if there was someone who bought at that level who took profits higher, if they're willing to buy in at that price that they previously purchased or traded at, then that tells us that's a pretty good setup. So you definitely want to keep that one on the radar as well. Next up is Infosys. We're going to look at is this the US version? I don't think so. We're going to go here on the NYSE. Okay. So this one, because it's an Indian company, it's a little bit more difficult to use the roadmap on this overall. So if you wanted to, you could go to Infosys on the NSE exchange, and then you can see this a little bit better. So this has, if you want to be, it's a continuation pattern. Volume is being accepted. You could make the case for a diamond pattern where you did see volatility expansion. This is kind of beyond the scope of what we talk about normally, but you know, you could make the case for some consolidation and compression. I'm pretty sure once these markets open up, then it will start to include the move that we saw in the ADR today, which is a pretty good breakout. And that's one where you could probably just go out and buy some calls and you'll be okay. Next up, I know we got a lot on the list. There was like 20 something stocks. There were some pretty good names. Oracle for a nice little post earnings announcement drift play. Again, nice move on earnings. Wait for it to consolidate for a couple weeks and you have a really good setup there. VRSN had a really nice push off of, you can see it again. This is why we keep looking at this roadmap and we look at these HVNs and LVNs, because those levels tend to act as support and resistance. Okay, so we come into this volume shelf and the LVN right here, and that is where we started to find buyers coming in. Okay, now from here we can throw on an anchored VWAP off of that pivot low and say, okay, where are we seeing price responses? And you know, this is not hindsight or anything like that. Prior resistance, potential support, and I want to point out how the stock traded as that rug pull hit into 233, right into that anchored VWAP, and we found price response, very aggressive response into that. So that is a signal. That is something you should probably pay attention to. And then finally, we've got Zebra Technologies. The ticker is ZBRA. It's a very original ticker, right? 3 weeks high and tight pattern, nice little flag pattern. It had a nice move on earnings. Again, price is being accepted at higher levels, volume is building out at those higher levels, and you've got a pretty clear level in which to manage your risk. What I would absolutely love to see in the stock, and look, this is a $600 stock. I don't think the options are particularly liquid, but what I would like to see is this level, 580, 578. If we saw a push underneath it, and then you run some stops and then you reverse back above it, that is the perfect entry that you can get on that name. Okay, so those are the levels and stocks I'm looking at. I just want to throw one more thing on here for me. There we go. Okay, man, that would just line up perfectly, right? So what I would love to see on Zebra is you get some tech selling into the end of the year. This gets hit, it takes out 580, it touches that anchored VWAP, so you get a stop run, and then you get institutional buyers picking shares back up into that. If that were to happen, and if we see a reversal back above 578, you'd want to play it for a push to 610. Okay, so if you want to get more training on how I use this roadmap, how to profitably trade using these indicators that no one else really uses out there, there's a free training that you can get access to below this video. Fill out your name and your email, and I think we send you some text messages as well. That way you can see exactly how we trade this. After you do that, you can come work with me as a client, and I will send you all of my trade setups and alerts via email and SMS as well. That's all I got for today. Thanks for watching, and I'll see you next week. Take care.